I first started trading crypto back in 2017. At the time, I was going into second year of university and I only had a couple $1,000s to my name, but I'd always been really interested in investing in trading. One of my buddies was really bullish on crypto, so I decided that I would start investing in trading with Bitcoin. And I got into Bitcoin at a really good time in the bull cycle of 2017, and I ended up tripling my money. Now, I wasn't really a believer in crypto at that time, and to be honest, I didn't even know what I was doing from a trading or investing standpoint, but I knew that my goal was always to get started in the stock market. So I ended up taking all my profits from the crypto market and shifting them over to the stock market in the beginning of 2018. Now, after that, I had completely forgotten about the crypto market for around 2 years until 2020 when I started to take a look at crypto once again. So I decided that I would take the experience that I'd gained in the 3 years that I've spent analyzing stocks and valuing stocks in the stock market to analyzing and valuing crypto assets. And the first crypto asset we're going to be looking at, and what's going to be a series of videos covering different cryptos, is FTT. Now, FTT is a native token that operates as the backbone of the FTX trading platform. And in this video, I'm going to be covering why I believe FTT is an undervalued token and why it presents a great investment opportunity in 2021. So with that, let's get right into it. Alright, so the analysis behind FTT is actually going to be very similar to the analysis that I would be doing on a stock. And that's because the success of FTT and the returns that you're going to be making as an investor in FTT are going to be directly tied to the success of FTX as a platform. So first we're going to take a look at the industry and the competitive landscape. Then we're going to take a look at FTX and what makes it such a strong company. And then we're going to move into the utility and incentive schemes that are going to be driving demand for the FTT token. So FTX is a cryptocurrency derivatives trading platform, and they're competing in the market against some pretty established players like Binance, Huobi, and OKX. FTX launched operations on May 8th of 2019, and since then have become the fourth largest liquidity provider on the market. And this is pretty incredible, and we're going to get into exactly how they were able to do that. But in terms of the competitive landscape, there's two things that determine success among exchanges. The first is the ability to provide liquidity, and the second is the ability to provide innovative new trading products. Now, customers don't really have much brand loyalty in terms of the exchanges that they're using to execute their trades. The switching cost among different platforms is very low because it costs almost nothing to transfer your assets from one wallet address to another. So for that reason, customers aren't very loyal to any one exchange, and they're going to migrate to the exchanges that provide them with one, the best liquidity, because that means that they're going to be able to get the best executions on that platform, and two, the most innovative trading products. Now, in terms of liquidity, FTX is currently at a disadvantage in relation to Binance, Huobi, and OKX, who already have an established base of customers who have been using their spot markets for a long time. But in terms of providing their clients with innovative new trading products, none of them stand a chance against FTX. Now, to understand how FTX was able to generate so much liquidity on their platform in such a short amount of time, and why they're able to offer more innovative products than any of their competitors, we have to take a look at their team. And their team is arguably the strongest competitive advantage that FTX has. Now, the story of why FTX was started is actually pretty interesting. FTX was founded by a group of algorithmic cryptocurrency traders who weren't happy with the current products on the market. FTX is currently backed by Alameda Research, who is a quantitative cryptocurrency trading firm that manages around $100 million in assets. Now, the team at Alameda found a lot of problems with the current derivatives trading products on the market, and they would always go to these exchanges and pitch ideas on how they can make improvements to the platform, but none of these exchanges listened to them. So the team decided to create their own derivatives trading platform. And this is really important because the team that created FTX is a team that has very deep understanding of how the derivatives trading market works. And in addition to this, they have access to a lot of connections with other exchanges in the world because of the fact that they're backed by Alameda Research. So the fact that Alameda Research generates so much volume on a daily basis is how FTX was able to generate that initial liquidity on their platform. But on top of this, FTX also offers the most innovative products on the market. You can not only trade futures on their platform, but you can also trade options. You have access to tokenized stocks. You can lend and borrow different cryptos on their platform. You can participate in prediction markets. You can also participate in volatility markets and fiat markets. And you also have access to leveraged tokens. So as far as access to trading products goes, there's no platform that can keep up with the amount of products that FTX is delivering on a daily basis. And what was really cool to see in this last week, as there was a lot of demand for tokenized stocks like GameStop, FTX was able to offer that within just a few days of the frenzy that happened with GameStop stock in the stock market. So this team is very fast acting, and that's something that made me even more bullish and made me buy even more FTT, was seeing how quickly they're able to offer products that there was clearly a lot of demand for in the market. Now, in addition to offering a lot of innovative products, the way that FTX was designed from the ground up is also very innovative. For example, their liquidation engine is 10 times better than anything on the market currently. With a normal derivative trading platform, clawbacks happen all the time. And essentially what a clawback is when there's a mass liquidation event on the cryptocurrency exchange, and the account values of a lot of the users on the platform falls below the margin maintenance requirement, then the liquidation engine is forced to take control of that customer's assets and sell it on the market to prevent any further losses. But the problem is that these mass liquidation events usually happen during very volatile moments in the market, where if you have to sell a bunch of these liquidated positions, that's just going to push the market even further and potentially cause the exchange to lose money. So essentially how the exchanges deal with this problem is they close out positions of their clients who are not being liquidated in order to provide liquidity to the market to fill all of these sell orders. Obviously this isn't very efficient and it's not fair to the clients who are being clawed back. But FTX has designed a liquidation engine that plugs into other exchanges during times of high volatility in order to provide excess liquidity to their exchange. So if there's a massive liquidation event on FTX, then a bunch of other liquidity providers are going to have access to FTX's platform and provide liquidity through the liquidity backstop program that they have designed in order to be able to fill all of these sell orders that happen during liquidation events. In addition to that, another innovative feature to FTX is that everything is settled in stablecoins. And that's very important and makes for a more efficient market because on other derivatives trading platforms, let's say you wanted to enter a trade with XRP. You would have to deposit XRP into that account to be used as collateral for any XRP trades that you want to make. Clearly, that's far less efficient than if you had Bitcoin in your account and you'd be able to use that as collateral for an XRP trade. And that's exactly what FTX does. You can use any of your assets as collateral because everything is settled in a stablecoin. And it makes the experience much more understandable for new users, and it's also just more efficient in general. So FTX has built from the ground up a platform that is more efficient and effective for the traders that are using it. And even though FTX currently does have a disadvantage in terms of liquidity compared to something like Binance, I think that liquidity is naturally going to accumulate to FTX given the innovative products that they're able to offer and the innovative features that they've built into the platform from the ground up. So in conclusion on why I think FTX is positioned very well for growth in the competitive landscape is because not only do they offer great liquidity and they've been able to scale that liquidity up really quickly in just a year and a half, gives me a lot of confidence in their ability to continue to accumulate more liquidity on their platform. And additionally, what I think is going to be driving demand for use of the platform is the fact that they offer the most innovative derivative trading products on the market. So now that we've gone over the company and industry analysis, let's jump into the utility and incentive schemes behind the FTT token that are going to be driving its demand and future price appreciation. So for FTT to be a good investment, there has to be a reason for somebody to want to buy it in the first place. Now there's a number of clever incentive systems that have been designed to increase demand of FTT over time. Now when taking a look at why certain tokens make good investments, I've kind of taken the approach that I want to look at two different aspects of a token. The first is I want to look at the utility of the token, which is what's going to generate the initial demand for the token. And essentially what the utility of the token means is what can I do with this token and why is it valuable to hold. And the second is the investment incentives driving the token. And we're going to get into both of these and you're going to see what I mean by utility and investment incentives. Now let's start with the utility incentives for FTT. Now I've identified four main use cases that are going to be driving the base layer of demand for FTT. The first is that you're going to be getting fee discounts on your trades. This is especially important for people who are high volume traders, and generally high volume traders are people with access to a lot of capital. So this is going to be generating the base layer of demand for high volume traders on the platform, because the more FTT they own, the more they're going to be saving on their trading costs. The second is that you get rebates on your OTC trades. Now this is very similar to the trading discounts that you get on fees for holding FTT, and both of them follow a tiered structure. And you can take a look at the tiered structure right here. So in addition to getting discounts on trading fees and getting rebates on OTC trades, the third reason is that you can use FTT as collateral for your trading. Now that's a very big advantage because if you couldn't use FTT as collateral for your trading, then there would be a disincentive to holding FTT. Now the fourth and final use case for FTT is that if you stake your FTT, which essentially means to lend out your FTT, you get a number of other benefits. These benefits include increased referral rates, maker fee rebates, bonus votes on polls run on the platform, and you also get increased airdrop rewards. And again, the size of all these benefits is tiered and depends on the amount of FTT that you've staked. So to conclude the four main demand generating factors for FTT from a use case perspective, you get trading fee discounts, you get rebates on your OTC trades, you're able to use FTT as collateral, and you can stake your FTT in order to get additional benefits. Now, in addition to the utility incentives for holding FTT, there's also investment incentives to holding FTT. And those are that FTT is going to be using 33% of fees generated on the platform, 10% of socialized gains on the insurance fund, as well as 5% of other fees generated on the platform to buy and burn FTT on a weekly basis. And the way that you can look at this is essentially as a share buyback program for a common stock. Now, the way that I've taken to look at this is essentially like being paid a tax-advantaged royalty for being an investor in FTT. Now, over the last couple of weeks, FTT has been buying and burning around $2 million worth of FTT on a weekly basis. This pans out to an annualized rate of around $104 million worth of FTT being bought and burned every single year. So that essentially means if you're investing in FTT today, you're paying for a 10% annualized yield, but that's also not taking into account any future growth. Now, there are two sources of growth that are going to increase the value of your investment in FTT. The first is the growth in the amount of fees that are generated on the platform. Now, that is going to come from the fact that FTX is going to continue to generate more demand for their products since they have the best trading platform out there, and they also offer the most innovative products. Now, as I said, I was really bullish after what happened this week, as we saw that FTX was able to add GameStop and Silver onto their platform within a couple of days of seeing increased demand from the market. So what this showed me is that not only has the team created an absolutely incredible product, but that they're also dedicated to increasing the adoption of their platform by staying up to date on trends within the market and delivering on those high demand asks from market participants. Now, comparing the amount of FTT that FTX was buying and burning just a year ago, they're only buying and burning around $200,000 worth of FTT on a weekly basis. And a year later, they're already buying and burning $2 million worth of FTT on a weekly basis. So this means that they've had a tenfold increase in the revenues generated on the platform, and that is only going to keep growing this year as more and more traders move over to FTX to be able to access the innovative trading products and innovative trading platform that FTX has built up over the last couple of years. Now, the second source of growth is that the risk appetite of the market is going to increase. And what I mean by this is that it's possible that as the risk appetite of the market goes up, then the yield that is acceptable on FTT is going to go lower, which means that the price is going to be able to go higher. So if the market decides that FTT is worth trading at a yield of 5% rather than 10%, that right there is a twofold increase in the valuation of FTT. And when you couple that with the fact that it's growing at an extremely rapid rate and that the crypto market is expected to have an absolutely spectacular year in 2021, I think you have an excellent risk-reward setup by purchasing FTT today. Now, I also want to briefly mention some of the risks that are present with an investment in FTT because you have to be aware of them. Now, the main risk that you should be aware of with FTT is the fact that the regulation surrounding other tokenized projects isn't as great as compared to something like Bitcoin. The regulations surrounding Bitcoin are pretty clear in most countries and jurisdictions, but the regulations surrounding tokenized projects like FTT isn't so clear. So there's always the regulatory risk that somebody in your jurisdiction is going to come and shut down FTT and create a massive demand shock in the market. Now, another risk that you should be aware of in FTT is the fact that the supply and demand mechanics that are driving FTT might be offset by some liquidation events within the market. For example, the fact that FTT is able to be used as collateral on the platform means that when there is a massive demand shock and the prices fall really rapidly and market participants are looking to liquidate some of their positions to increase their cash position, a lot of these traders are going to be selling their FTT because they need to raise cash during liquidation events. So volatility should be expected with your position in FTT, and you should use your position sizing to manage that risk accordingly. But with those two risks in mind, I do think that the incredible growth opportunity present here in FTX, based on how incredible of a product FTX is in the first place, and the fact that the fees generated by the platform are going to continue to go through 2021 as we go through another major hype cycle through the crypto market, I think that all the stars are aligning to create an incredibly good risk-return setup in FTT. So I hope you guys enjoyed this video and learned something new, and I look forward to seeing you all in my next video.